Live market recap, June 1st, 2023. Going into the daily as we usually do, E-mini playbook, looking at the activities of the day, finding out what occurred and what the playbook looked like. Starting out with the 1 minute or 2 minute chart, we are seeing the position that we were in, and we're going to bypass the daily today because the daily is giving us a very mixed signal. And the reason is because we still have not been able to break through this resistance zone. We had an attempt here, an attempt here, an attempt here, an attempt here. And today was another attempt. So it's good to notice, but however, that still puts us into definitive congested territory. So we are conducting the trades accordingly. And looking at the 2 minute, today's example is a great indicator of why it's not a good idea to jump in too quickly when the market is congested. The battle occurs every day in a similar fashion. The bulls and the bears are going back and forth. The bulls are looking to move the market up. Bears are looking to move the market down. So on any particular day, there's going to be an establishment of control. And if there's no control, if both of them have equal power, then we go into congestion. So those are the three market moves that we get into: up, down, and sideways, which is congestion. And when the daily is pointing to congestion, then we are paying specific attention to the intraday power activity between the two. And what becomes important is the first hour of trading activity. So looking at this, which we paint, and we have an algorithm that we get into, and it gives us an indicator of the activity for the first hour. And this box let us know what the range was for the first hour of trading. After we establish that, we're able to look at the rest of the day based on that first hour of trading. If we see dominance from one direction or the other, we have confidence to enter into a position. If not, then it's best to sit on the sidelines. And today was a great example of that because we had a number of individuals putting on positions after seeing certain movements, which in a trending market or in a different type of market other than congestion would have been okay to take, but however, they would prove to not be so. In a congested market, we want to wait until we see a high level of control from one party or the other. So today's movement, when we were looking at the advanced decline line, this was looking very bearish as it was pointing downwards. And when it's pointing downwards, it looks as though there is control when there's actually not. And so what we want to wait for is we want to wait for definitive direction. And then once the move happened, we are able to jump on. And that's what occurred today. After this head fake downward, we were able to get a shift on the advanced decline line. Again, the advanced decline line is the number of stocks that are increasing versus the number that are decreasing. So first hour of trading occurs here going into 10:30. We still do not have a sense of control, but after 10:30, we can clearly see the advanced decline line moving towards the upside all the way until the end of the London session, which was during the middle of the day. How did that relate to what actually occurred on the 2 minute chart? After we see this head fake, we then get into the actual movement. So breaking out of the first hour range is a good indicator of who's in control. Even though it happened at 10:16 and then it happened again at 10:42, after we see the follow through at 10:42, that gives the indication of who's in control. And we also have movement on the trend dots, which is letting us know that there's an upward movement as well. So congestion breeds a higher sensitivity towards intraday movements, which is what we were paying attention to today. And you definitely want to wait until that's established, because if it's not established yet, you can wind up in a choppy market, and setups that should work won't work, or they'll be very choppy and won't have any follow through. Once the dominance is established, then it's safer to get into a position, because the market will play out in favor of the dominant side. So two things occurring today: that patience and waiting until this happened. Basically, this was around 11:15. That patience and waiting for that to happen gives a stronger indication of the rest of the day's activity. And getting in at 42.05 and going to where the market went to was about 20 points. And we can see that corresponding with the daily, the range began, the move began right here, and it went all the way up here. So this is an exceptional bar right here, in that it opens, here's the left tick here, and it closed the day, here's the right tick right here. So getting on the right side of that move is very tricky on a congested day, but today's example is a good one as to the power of the first hour's range. When the first hour's range is broken to one side or the other, that gives a good indication of the dominance of the market. So hope everyone took good indication of what was playing out today. The playbook was pretty complicated, but looking at it with the right tools and with the right level of patience gets into a position where there is an opportunity to take advantage of moves like this. So hope everyone was able to. Getting into more in our ebook, we're getting a lot of good feedback from the ebook. The principles are established. We go over into the 3 ways that the market moves. We go into the 7 moods, and we get into how to analyze the day's activity in pre-market prep and also during the day, to be able to get a clear idea of who's in control and which direction to go in. Hope everyone is well and have a good evening. We look forward to future recaps.